Coinbase reported its worst Q1 loss in years yesterday and then suffered a 7-hour outage on the platform because of Amazon Web Services. Meanwhile, Morgan Stanley came in this week with its own trading profit, and the BIPs are coming in way lower than the competitors. And in case you missed it, Michael Saylor said he might sell some Bitcoin. We got a lot to talk about today. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of Wall Street. We're going to spend the next 15 minutes talking about the big headlines, which ones matter and which ones don't. And today I actually have to show up and talk to you guys by myself. I've had the luxury over the past few days of doing over 30 interviews, but 3 of them obviously were live on this show. So my guest did the heavy lifting, giving you the incredible insight. But having talked to so many people, I have a lot to say about what I witnessed at Consensus this week and what's happening in crypto. One story that had not broken while I was at Consensus in Miami Beach, though, is this one right here. Coinbase stock drops as company posts second consecutive quarterly loss amid crypto slump. There's actually 3 headlines surrounding Coinbase right now. Second one, Coinbase resumes trading after 7-hour exchange outage. This is because of Amazon Web Services. What I don't see in this Bloomberg headline, strangely, is that the CME was also down, but we seem to get uniquely negative headlines towards crypto on Bloomberg. Not saying there's a conspiracy theory, but there's a conspiracy theory. And the third one is this week, we also had Coinbase announcing a 14% reduction in staff. They said it was because of AI. But man, that is a curious headline when you go back to the one that we talked about, Coinbase Q1 loss. So let's put some numbers to this and see if it was really because of AI or maybe it was just a really good time to drop some of the dead weight at Coinbase. Not a conspiracy theory once again, right? But here we go. Revenue was $1.41 billion, down 31% year over year. They missed the $1.48 billion consensus. Net loss total was $394 million. That was $1.49 per share. The expectation on Wall Street was a 27-cent expected profit per share. So this was a wild miss. They lost $482 million unrealized on crypto held for investment. Welcome to the party, guys. They hold crypto. So do you. We're all down bad. Thank you for coming to my TED Talk. But also, the big news, I think, is that last year, Q1, they had a $65.6 million profit. This year, Q1, obviously almost a $400 million loss. But anybody who's been here for a while knows exactly what Coinbase or exchange earnings will look like when prices go down. Now, Coinbase has multiple revenue streams. They've long touted the fact that they're building out new verticals. They had the stat where they had made $100 million in earnings a few quarters ago with 10 to 11 new, basically, business verticals. And that's all outstanding. But at the end of the day, there's still a crypto exchange. And when prices are down, and when altcoins have been down bad for 5 years, there's not that much retail trading on their platform, and that's how they earn their fees. This is how it works. So I don't know why there would be any expectation that they would have done dramatically better, knowing how bad Q1 has been for crypto markets. It's been terrible out there. So there was no way that Coinbase was going to post incredible earnings on trading fees from retail who have better things to do, like bet on tomorrow's weather on Polymarket. Now, I told you just a couple weeks ago that Robinhood had posted earnings, and they were down over 40% on their crypto earnings quarter over quarter, but that gap had been made up for them on their prediction market. So clearly, Coinbase has some gaps to fill here, but nothing will cure Coinbase earnings better than the price of Bitcoin inevitably rising. So I'm not worried about Coinbase here at all. I actually believe they'll be one of the top 10 biggest companies in the United States, an everything app for finance. I love what they're doing. I'm cheering them along from the sidelines. Let's chalk this up as a bad 3 to 6 months. But the next story may be a problem for them. Morgan Stanley debuts crypto trading, undercuts rivals on price. Now, this is a very, very big story. As I've told you, the Schwabs and Morgan Stanleys of the world have a capital flight problem. We talked about how Charles Schwab had added Bitcoin and Ethereum trading, and I broke down for you exactly what happened before that when somebody wanted to buy Bitcoin but was a Charles Schwab customer. They sold something in their Schwab portfolio, they sent the money over to Coinbase, they bought Bitcoin, and the money never came back. A, because once you buy Bitcoin, you're not sending your money back to Charles Schwab anyways, but B, because Charles Schwab's crypto wallet literally does not have withdrawals and deposits. You can't physically send it back if you wanted to. Well, Morgan Stanley clearly has gotten the memo over the past few weeks with a number of announcements here. But what I find most notable about their announcement is A, it's Bitcoin, Ethereum, and Solana. Have you been watching this show? Those three assets seem to be at the top of everybody's very, very short list, ahead of the very, very short bus of other assets in crypto. But we hear Bitcoin, Ethereum, and Solana every single time. But the really bigger news, once again, is they came in at 50 basis point fees. Schwab charges 75. Coinbase is 50 basis points and up to over 1%. Robinhood is commission free, but has up to a 95 bip spread. Fidelity coming at 100 BPS. So this will be the cheapest way to trade Bitcoin and Ethereum on a mainstream platform right now. And we all know that nobody's going to take that sitting down. This is going to be a race to the bottom where eventually we get no fees, which is great for retail. Now, remember, Morgan Stanley launched their Bitcoin spot ETF just a few short weeks ago. I told you all about that. Not only did they launch an ETF for the first time as a major commercial bank to do so, they launched it into a crowded space of 10 other existing Bitcoin spot ETFs. Why? Because they have 16,000 advisors out there selling to advisors, a sales staff selling to advisors, and they want to capture that profit and not give it to BlackRock and their competitors, but also they came in at 14 bips, once again undercutting the entire market on fees. Morgan Stanley is a real player in this market now, and it's only going to get better. There's 8.6 million E-Trade customers who are going to have access to this product by the end of the year at 50 bips. Now, the other huge story of the week, I'll set the table for you, obviously, is the strategy earning call where Michael Saylor said, "You might sell some Bitcoin to quote unquote inoculate the market." Now, I was at Consensus. Every time I do a conference, I get together with Saylor, and we usually do some sort of recording or hang out. We were having trouble getting it on the books, and then on Tuesday night, right after the earnings call, which I had not watched, we got a message that said he'll be available at 8:30 tomorrow morning if you can do it pre-conference. Great. I wake up in the morning on Wednesday, wipe the sleep out of my eyes. I say, yeah, he's on the books. Can't wait. Going to head over to the conference center. Then I open the news. Michael Saylor says he would sell some Bitcoin. I fell my way into the first conversation with the man himself about selling Bitcoin right after the earnings call. And we're going to show you a clip that's not released. It'll come out Sunday on my YouTube channel on the Wolf of Wall Street's podcast. Here's what he had to say about it.
The truth is, we might sell 20 basis points of Bitcoin, like 0.2% of Bitcoin in a month. We'd probably buy 5x or 10x that much in the same month. So people are getting caught up on that. But if you sell $100 million of Bitcoin in the same month that you buy $1 billion or $2 billion of Bitcoin, we're still net buyers of Bitcoin. We're still net holders of Bitcoin. But the benefit to being able to fund with Bitcoin is we have the option to never sell a share of stock again, and that really rips the faces off of the shorts. That's good, right? And then we also have the option to capture the tax credit, because we have billions of dollars of tax credits that if we were to simply sell the high basis Bitcoin, we would capture the tax benefit and we could fund the dividend. And then with STRC, we're selling so much STRC that we'll buy back 10 Bitcoin for every 1 Bitcoin we sell. And if you can do that, I would recommend you do it too. The key is for us to just be steady. The rest of the market will set the price. We will, buy 10 Bitcoin, might sell 1 Bitcoin, buy 10 more, sell 1 more, grind up. And I think it's just good for everybody in the ecosystem. Everybody's winning.
I love Michael Saylor. I just want to show you 2 tweets to show you the trajectory we got here. Of course, this is a very famous tweet from Michael Saylor. Sell a kidney if you must, but keep the Bitcoin yesterday. Buy more Bitcoin than you sell. It's fine. Guys, listen, I'm not mocking Michael Saylor here. He was actually a Bitcoin skeptic. He tweeted about Bitcoin not surviving long before he was orange-pilled. And if you know me, you know that I believe in strong opinions loosely held. The idea that you can have conviction in something, but if you are actually presented with new information, you should change your opinion, right? And that's what Michael Saylor is doing here and has done throughout his career, to his credit. But let's just say the quiet part out loud. Michael Saylor does not want to sell Bitcoin. As he said, even if he sells some for tax purposes or maybe to close out an old convertible note that they don't want to hold anymore because STRC is a superior product, he's going to buy more in the very same week or month as he sold in the first place. What I think he's really doing here is signaling to regulators, specifically the SEC, that retail is safe in his security STRC. Now, the SEC takes promises made by security issuers very, very seriously. And if he says we are going to sustain 11.5% yield and maintain par at $100 for STRC, they need to know that the Bitcoin that is theoretically backing it could be put to work if Bitcoin falls by 50% or the peg is lost or the dividends start to change. This is a very responsible statement, even in the face of criticism from Bitcoin maximalists, of what he would potentially be willing to do with his Bitcoin to make sure that STRC is exactly what is advertised to be for retail. And quickly, just talking about STRC right here, I bring up this dashboard sometimes. 99.99 is that STRC price right there. The minute this gets 100 is when the money printer turns on and Michael Saylor and Strategy start buying Bitcoin again with the STRC proceeds. That is going to happen end of day, early next week, and we're going to see billions more in Bitcoin bought. You wonder why the price of Bitcoin is going up? It's probably because everybody knows that Michael Saylor is about to buy billions of dollars of it and is front-running that. And we got another guy. It's the Michael Saylor of Ethereum, Tom Lee. You can tell how serious he is by how messed up his hair is on any given day. Bitcoin ending May above 76,000 would confirm new bull market. Tokenization and AI agentic finance are the main narratives driving the next bull cycle. This was at Consensus. We were supposed to have Tom Lee, but he canceled. I'm not mad. Call me Tom. But yeah, listen, Tom Lee is the king of the bull market prediction, $200,000 ETH by January 2014, right? I mean, this guy makes such wild predictions. You might be familiar with the Zen poet, the Notorious B.I.G., and in his seminal work, The 10 Crack Commandments, he said, rule number 4, know you heard this before, never get high on your own supply. Well, whatever Tom Lee is smoking and whoever's doing his hair, sign me up. Because this guy is a giga bull and he is never going to stop buying Ethereum, just like Michael Saylor is never going to stop buying Bitcoin. But he's right in this case. First of all, Bitcoin has never had 3 down months in a row in a bear market. We have a green March. We have a green April. It's only May 8th, too early to celebrate, but we are up a few percent already in May, roughly 5%. So it would be unprecedented if May closes well to be able to claim that we're in a bear cycle. But his more important point, and the one that was repeated over and over and over again on the floor of Consensus, was that tokenization is coming and AI agents are going to transact in tokens and in stablecoins, and it's going to send blockchain rails and crypto absolutely flying, and there's nothing anyone can do about it. Think about trillions of AI agents doing trillions in volume while we are all sleeping. Hell, the guys in my office over here right before the show just created something on Claude that's arbitraging Bitcoin on Polymarket, and apparently we made like $74 on paper in 20 minutes before the show. That's what's coming for everything and for everyone. And as a part of that, it's all going to be happening here on stablecoins. This is the CEO of Anchorage, who might have a vested interest in telling you that every single stablecoin issuer in the world is coming to Anchorage or has come to Anchorage. But 20 banks and tech giants are waiting to issue tokens with Anchorage Digital. We have a lineup right now of everyone who's already late to the stablecoin party trying to get their piece and figure this out. Whether you like it or not, we are not going to be sending money by Swift and ACH and Pony Express and on the back of exploding Iranian dolphins. That's not how money is going to move. It's going to move on stablecoins because, once again, they are better, faster, and cheaper. And if you don't have a stablecoin plan right now, it's over for you. You cannot be in payments and not be talking about crypto rails and stablecoins. First of all, Tom, call me and have your barber call me. It's not working for me right now. It's Friday and I haven't done my hair in weeks. But also, Coinbase had a bad quarter, but Coinbase is going to be just fine, even with Morgan Stanley coming in and trying to undercut them with 50 bips. The real story is that everybody is going to have access to crypto and everybody is going to want it. And that includes Michael Saylor, even if he occasionally has to sell some to inoculate the market. That's all we've got for this week on the Daily Wolf. We'll be back on Monday. Peace.